Welcome to episode 8 of the Bag Talk Show. Hopefully you guys are all doing well. Like always, we got your hosts Tyrell and Hanu. We're super excited for you guys to get into this video. But before we start, like always, I gotta ask Tyrell, they ready for this video, bro?
Bro, are they ever ready?
I don't know, man. I don't know. But make sure y'all like the video, right? So, you can continue promoting us on YouTube. If you're watching, we appreciate you guys. Thank you so much, like always. But also, make sure you subscribe to the channel because, we haven't gotten those subscribers, man. And Rob's been working out.
I've been working out.
So that's all it is.
And I started boxing more than I used to.
Yeah, so there it is. Make sure you subscribe if you haven't already done so, and click that little notification bell so you get notified because we do drop 2 videos every single week on Monday and obviously on Wednesday. So on Monday, we do Rookie Mondays, which is basically providing you guys with step-by-step instructions on how you can get into the investing game, real estate, basically just creating your financial literacy, which is super important, right? So I think that we could dive into this video because we got a lot coming for you guys. We got current news. We're going to talk about some Q&A sessions because you guys have been asking a lot of questions. I know you've been getting hit up, right?
Yeah, for a fact. A lot of people have been hitting us for questions and I just want to address them on this video.
Exactly. So we're going to take some time out to, address some questions for you guys. And then we're going to let you guys know what you guys expect for this week. And then obviously next week as well. But if you have not already checked out our Monday video, we went into great detail on Robinhood and Acorns. So I thought that was a great video, bro.
Yeah, we had the whole visual showed on the screen. You can see all the buttons we pressed on Robinhood. We explained all the different terminology on Robinhood and on Acorns. So y'all should check that out if you're just getting into investing.
For sure, because I know, a lot of people have been talking about how to actually do stuff. They get confused on certain, buttons to click. So we really try to break it down. So if you haven't already done so, take a quick second and just go check that out. But let's just dive into today, bro. I know we have a lot planned out. So in terms of current news, right? So let's just start with the heavy hitter with crypto. So right now, there's a lot going on. Obviously, we talked about it in the last video as well. But right now, Portugal actually came out and said there's no tax on crypto, right, in general. So literally a 0% tax. So no matter if you buy, sell, exchange, whatever, you're not getting taxed on it. Yo, what does that mean, though?
Bro, what that means is now that becomes a place that a lot of people will be looking to move to who are crypto heavy.
Yep.
Because why stay in a place or a country where you're going to get taxed on your gains? Because we know in America, you're taxed on your crypto. You still have to pay capital gains tax when you convert it back to US dollars.
It's literally it's actually taxed as a property.
Exactly. So it's like if you have a location like Portugal that you could go to, why would you not go there? Like if I had a bunch of money in crypto, I might think about setting up shop in Portugal.
Yeah, and it's funny because as you see on the news right now, right, it says the Bitcoin family immigrates to Portugal for 0% tax on cryptocurrency. So the Bitcoin family, they're actually referring to, this is actually really cool. We didn't even know this until we looked it up, but I'm sorry if we mispronounced this. Didi Taihuta, I want to say, was that good?
Man, I might name my daughter that Didi Taihutu.
Yeah, I don't know if Taihutu. I'm not sure if I'm pronouncing this right or not. But basically,
one day.
Yeah, right. This individual actually in 2017 sold all his assets and converted it into crypto when it was back around $900, right?
Hey, so, first of all, that's very risky, by the way.
Extremely. No, but that's the thing. You saw the article where they were talking about former nurses just gaining 1.2 million in crypto. So people are taking very large risks right now, which is insane. But this man took a risk in 2017 when it was $900. So when he saw like a 20x return, he was like, wow, what's going on? But now that crypto, even though it's down, which we will talk about, it's at 46,000. He's thinking about how to protect his assets. So that's why Portugal is huge. So to your point, a lot of rich people will be moving there. So it's huge.
Yeah, him and his family are just one example of that.
And I know we had some other news as well, so you want to dive into that as well?
Yeah, Sequoia Capital. They made a big bet on Web3 by putting $450 million into Polygon. Polygon is a crypto, right?
Yeah.
So Sequoia Capital are the India branch.
Exactly.
They're the ones who did that, and we talked about India last week, did we not?
Yeah, I think, correct me if I'm wrong on this one, but from my memory, it was like 82% of Indians are basically saying they will be, focusing on crypto once they get more clarifications on regulation.
Exactly.
Right? So obviously, this news is huge.
Yep. Because the Indian branch of Sequoia Capital just put 450 million into Polygon. Like, I gotta say that again, because that's not a little bit of money.
And for those who don't know, Sequoia Capital is a venture capitalist firm, so it provides a lot of money and invests into technology and different upcoming ventures. So the fact that they're investing in crypto, obviously it's huge, and it's not just a small firm. Like, it's actually a really, really large firm. So the Indian branch he's talking about, it's a big deal. I just wanted to mention that before you continue.
Yeah, for a fact, that's a big deal. And they put into Polygon, and Polygon is something that is actually an interesting project. Polygon is a layer 2 solution to Ethereum. What does that mean? I mean, Ethereum is the second biggest crypto in the world.
Right, exactly.
Behind Bitcoin. And Ethereum has so much traffic on it because everybody's on Ethereum, using their applications on it, their decentralized applications on it. And so Polygon is the solution for that. Polygon comes and acts as like a side chain, and they actually take some weight off Ethereum. They're like, we'll take some of your traffic, we'll take some of your transactions so that your network could flow way smoother.
Right.
And so the fact that they're investing in Polygon shows that, like, okay, Sequoia Capital, the Indian branch, is tapped in.
Yeah, and it's crazy because at the end of the day, they're able to, when I say they, Polygon, right, they're actually able to get 10,000 transactions per second, which is a huge innovation to what Ethereum's already doing.
Yeah.
So it's all about.
Ethereum only does 30 transactions per second,
which is still, honestly, when you think about it, since this is something crazy, right? He's saying 30, and you guys might be like, whoa, 10,000, 30. 30 is still pretty good in terms of how new cryptocurrency is, guys. Like, when you really think about it, there was a survey done in 2021 July, which basically said that out of the 1,700 American adults, only 89% of them, right, were like, oh, I actually have heard of Bitcoin, but I don't know what it is, right?
Yeah.
That's pretty ridiculous when you think about it, because you're like, yo, Bitcoin's so big, crypto is so big. At the end of the day, to us, it's big. To you guys listening, right, it's big. But a lot of people actually still don't know about it.
Yeah, a lot of people still don't know about it. And then even when they know about it, they don't want to invest in it. Like, among those people, 27% of them said they would consider investing in crypto.
Right.
Only 27%
Exactly.
of them would. And then how many actually have? Only 13%.
Think about it, right? So 89% have heard of Bitcoin. Because Bitcoin at this point, right, even in 2021, it was a household name. Yeah. But what did it mean? No one actually knew it.
Facts. I know I was hearing about Bitcoin back in the day. I was like, what are they talking about? All I cared about was, what's the next NBA game coming out?
Yeah, exactly.
I'm trying to hear that Bitcoin nonsense.
And now we're like, yo, is LeBron still playing? Like, what's going on? Is he hurt right now?
I don't know nothing about none of that. All I care about is Bitcoin. Like,
it's crazy. But in terms of crypto news, that is pretty crazy. So we just mentioned two things to you. And even last week, we talked about crypto in general. So if you guys are keeping up right now, it's obviously growing. So make sure you're doing your research on crypto. If you're subscribed to this channel, you've already done a great job. We're going to continue providing you with stuff. For
a fact. And I don't want them to feel like you missed out on the train. Like we said, only 13% of people in America had even invested in crypto or in Bitcoin,
You know what's funny about that? Someone was actually just talking to me about this earlier, and they said, yo, did I miss out on crypto? Is it over? It's not. No. It's just started.
It's really just started. There's so much more room to grow. Ride the growth. Invest on these dips,
I agree. No, I 100% agree. In terms of crypto, is there anything else we want to add on to that?
Nah, we touch on that a little later.
All right,
get back to crypto.
Got you. Okay, so let's just dive into current news related to real estate. And I know you're big on this because honestly, I got to give credit where credit is due. Tyrell has been talking a lot about interest rates. He's talking about house prices going up or down, and he's made some solid predictions. And honestly, you're spot on so far with everything. So I got to give credit. Right now on the screen, as you see, right, mortgage rates are now at 3.95%, which is higher than last week, which was 3.74%. Now, what does this mean, bro?
Yeah, listen, bro, that just shows that interest rates on these loans are increasing. They're increasing kind of rapidly in a sense. You know what I mean? Like that's not a small jump. People underestimate the difference between a 3.74% rate on a 30-year loan, right, to a 3.95% rate. Yeah, because even that 0.21 or difference or whatever it may be, right?
Like you might just be, oh, it's such a small difference. That's actually thousands of dollars added onto your lifetime of the loan. Yep. So it really does add up. And not only did this go up, we're basically almost at that 4% mark, right? So this is the highest interest rates that we've had. Wait for it. since March of 2022. I'm sorry, of 2020.
Yeah, and what happened in March 2020?
Honestly, the world has never been the same. I'm just going to put it like that, right?
You know what I mean? So it's like we saw what happened. Real estate boomed in this pandemic due to them dropping the interest rates. Right? They dropped the interest rates in order to combat all the economic turmoil that went on based on Corona. And so this is the first time they're like, listen, these rates are coming back up. Yeah, Corona's still here. And honestly, house prices are still crazy. And the interest rates are still increasing.
Speaking of house prices, because this was a research that we did back in the day, right? So back in the day, as in December, when we were just looking to start the channel, we were like, yo, let's look up, houses, crypto, stock, everything. Right. And we found something with Zillow, which is obviously a household name in real estate. They said that home prices were expected to rise 11%, right? So now, what are they saying? They're coming back to us, and once again, you see this on the screen right now, they're saying that it's actually expected to rise 16% now.
So they changed their projections.
Depends how you look at it. For people who are looking to get in a negative way, because now it's like, yo, home prices. If someone was $100,000, I was expected to go up 11%. Like, damn, that's already 11% is big. Yeah. Now you're saying 16. That hurts. On top of the interest rates. Yeah,
on top of the interest rates increasing. So it's like a perfect storm. Let's really think about what's going on in real estate. Let's sit down and really think about it, y'all. We are 5 million homes behind the demand that we need. Everybody wants a house. There's not enough houses to go around.
Right.
There is still a labor shortage.
Right.
Okay, so there's not enough people building these homes. Inflation is already crazy. We about to touch on inflation right now too.
For sure.
Inflation is crazy. So even getting materials to build these homes is extremely expensive. So it's hard to build. There's not enough people to build. The supply chain is all messed up. The interest rates are now increasing on top of this.
Right.
So even as they increase, it's actually causing more of a boom in the initial stages because everybody's like, oh, I need to buy a house before it increases to a point of no return.
Which is perfect. I don't know if you did this on purpose or not, but this is actually perfect because right now it translates into this point. So homeowners are rushing to buy their homes, right? Because they're like, yo, I want to capture that low interest rate as you just mentioned. Or if they already own a home, they're looking at banks to say, yo, I want to refinance ASAP because I want to get that lower interest rate. So last year, exactly at this time, interest rates were 2.8%.
Yeah.
And now, you just heard us say it. They're at 3.95%.
Yep.
Which is, once again, an increase from last week. Yeah. So I don't know exactly what to tell you guys because we've been saying it for a while now. But we're just going to say it again, which we're going to dive into it in the Q&A session. If you're looking to purchase a home and you're thinking about waiting, that's not the best approach.
Man, listen, people have been waiting for years. I'm going to tell you, you could look at, like I said, the night we brought this up before. People back in the 70s been waiting because there was a huge real estate boom back then as well.
Yep.
And they're like, yo, I'm waiting for prices to come back. They never came back to where they originally started at.
Exactly.
So you guys might be waiting forever if you choose to do that. Please invest in real estate when it makes sense for you. You have to have money to do it. And you have to know how to calculate your numbers, which we will help you with on Bagsfield. We have content for that to tell you how to calculate a real estate deal.
Absolutely. And I know we're going to touch on this in Q&A, but I have nothing else to add on to that. He said it perfectly. Just listen to what he said, and then you guys should be straight with that. Don't wait, essentially, is the goal here, right? Or is the point that we're trying to make.
Right.
Now, in terms of the stock market, this is the point that you guys are probably going to be excited about when we say it, but just, hold up for a sec. Word. So there's a lot happening. Do you want to tackle it for him real quick? What's going on with Google and the stock market?
Yeah, man. Listen, so some of y'all might know, you might have looked up, okay, what company should I invest in? And you might have said, yo, Google sounds like a great choice. And you're right about that.
Yep.
But then you might have gone on your brokerage and be like, yo, hold up, what? Google $2,600, $2,800.
If you don't know what a brokerage is, what should they do, bro?
Go to Rookie Mondays. We just touched on brokerages on Monday. What are y'all doing? But they tapped in. I know they tapped in. I know you watched it.
My fault. I didn't mean to cut you off. Continue.
I know you watched it.
Continue. My fault.
Yeah. So we're now on a real note though, so you might have looked at Google like, yo, it's so expensive. I can't afford this. So guess what they're doing? They are about to do a stock split.
Yep.
Which means that they are making more shares available. So therefore, what will that do? suppress the price.
Yeah, in the most simple definition, stock split is literally saying that they're essentially taking the price right now, dividing it, lowering it, right, and increasing the overall amount of shares. That's all it is in the most simple format. Yeah. So what did you? I didn't hear you say, but what's the stock split, bro?
Their stock split is a 20-for-1. So that means
Sheesh.
if you had one share of Google prior to, like, say I had one share, I'm like, okay, after July 15th, you're gonna now have 20 shares.
Yeah. So,
but the price is gonna be lower.
Exactly.
Of each share. Yeah, you're not gonna. They're not gonna be like, yo, you have one $2,800 share. Now you got $2,800.
Exactly.
$2,800 shares. Nah.
Exactly.
Slow down.
So if you have like essentially, if I remember correctly, it's supposed to be now after that split, it would be basically at the current price, right? It would be 150 after they do the split on that, which is with the whole point of a stock split for you guys. If you didn't catch this yet, is essentially to say, hey, like, oh, a stock is so expensive, it's $3,000. It kind of discourages people from investing in this. And you guys have probably thought about that. Like, hey, I can't own one share of Google. I don't have $3,000 to invest. So now they're saying, oh, I'm going to make it 150 for you. It makes it more accessible.
Attractive.
Exactly. Yeah. So now it's like, yo, I could actually buy this. And that's the point that they're trying to make.
That's the point they're trying to make. But low key, you should know it's like an illusion. Because ultimately, I know like a lot of y'all didn't do too well in math class, The shade is always real.
Honestly, I got -2 times -2 wrong today, right? What was the I was so confused for a second.
I asked him last time, I'm like, yo, what's -2 times +1?
I was like, I don't even know what I said. I was just like completely off. But in my defense, I did hear him wrong, honestly.
He heard me wrong, quote unquote.
Oh, here we go. But regardless, stock split wise.
Yeah, you don't actually like, it's an illusion. Like, so if say you had of your own money, $100,000 in Google. Once they do the stock split, you still have $100,000 in Google.
Exactly, and to that point, a lot of you guys might be a little confused on, share versus the actual dollar value you have invested. We're going to be diving into this on Rookie Mondays in detail.
I can't wait.
Right, so it's going to be really, really cool because obviously when we teach the students, like kids, right, they always ask us these questions. Even adults sometimes struggle to ask these questions. If you're struggling, and think shares automatically equals more value than what you currently have invested, that's not actually correct, and we will be tackling that. So just listen to what we're saying right now. Just because you have more shares after this split does not mean automatically you have a higher value in Google. Your value stays the same.
Exactly. Man, those numbers behind investing are so important. Like, if y'all don't understand the math when it comes to percentages, shares, principal amount, like, man, you will mess up your whole portfolio thinking you're doing something that you're not.
Exactly. And we're going to obviously help you out with that piece. And then in terms of the other big news on stock, this one's huge because I think, honestly, it's our generation. This one hits home. So Facebook, bro, we gotta just say at this point, right? Is this the end of Facebook as we know it, right?
Wow.
Because when you think about it, Facebook just lost $230 billion with a B from its market value. So what's up? Is this the end of Facebook?
Bro, that was the biggest one-day loss in stock market history.
Let's actually talk about it. So when you think about Facebook, and I personally don't know anyone, and correct me, comment below if you guys actually agree or disagree, but I don't personally know anyone that says, yo, Facebook's my favorite app.
Nah.
Right?
Nah, I don't know anybody that says that.
I don't know. I know you obviously are closer to like people who are younger in terms of students and stuff, but like, what is it, Snapchat?
Nah, no students I work with.
Exactly, right?
Talk
like,
about Facebook.
What is it, Snapchat, TikTok, like stuff like that.
They love Snap and TikTok.
Exactly. Like Twitter is more so for business news, which a lot of people talk about, like current news. So Instagram and Snap is more so just communicating with your friends. Facebook, honestly, it's kind of a dying breed at this point. And it's been around for, 20 years almost? Or is it actually been 20 years?
I don't know if it's been 20, but
it's almost 20, right? Yeah, it's almost around that time.
It's been a minute.
So what do you think about it? You think it's over?
Facebook, man. I mean, they still have WhatsApp. I think WhatsApp will remain dominant.
Which is crazy because WhatsApp and Instagram, which is actually holding them up right now, because obviously if you guys don't know this, Facebook owns those platforms.
Yeah, they own WhatsApp, they own Messenger, Facebook Messenger, obviously.
And this is Meta, which is Facebook, the same thing.
Right.
So when you really think about it though, Facebook is saying that Instagram and WhatsApp, their users actually went up But how much does the bots play into that is the factor that we're not sure about.
Exactly, because I know y'all see the bots all over their sites. You can go on Instagram, there's bots everywhere. There's bots watching your stories. There's bots commenting on your posts.
Exactly. And for those of you who've been complaining, Instagram algorithm's not working, people are not reading my stories enough, it's honestly because you actually have been, not I wouldn't say banned, but necessarily you've actually been communicating with bots, not on purpose, but they've been following your page, and that's been messing things up for you.
Yo, I ain't gonna lie, bro. Mark Zuckerberg might have to see me.
Yeah, no.
I ain't gonna lie, like, not because he bring out another side of me. I ain't want to do this on our show like this, but Mark Zuckerberg bringing out a whole nother side of me.
You're not the only one, bro, because people don't even like him.
He be robbed. The algorithm is all messed up on his app.
No, honestly, like people's likes, and this is not like stuff we're making up. Look it up, literally. Like likes are going down, views are going down. Yeah. So Facebook is taking a hit because obviously since it owns Instagram's getting a lot of backlash. Even though they have the whole Reels, they're only doing that to compete with TikTok at this point.
Yeah, they're just in a position of trying to compete with TikTok.
And even the stories, they were competing and stealing from Snapchat.
Yeah.
So it's essentially the same thing. And honestly, even at this point, Facebook is down 42% from its all-time high, which is, for you guys might be thinking, oh, great buying opportunity. What I would say is yes, if you think about it, sure, but there are other companies to invest in. We had a conversation with Josh Knappman on this one. Like, if you're watching, shout out to you for, engaging with us. At the end of the day, there's people who believe in it. There's people who don't believe in it. Just do your research on it. But from our end right now, does it have growth value? Yeah, because it still is, the largest social media company, but you want to kind of be careful.
Yeah, it's just like proceed with caution on that one. And for people that's looking to, like, if you had a position on Facebook, maybe you do want to wait it out.
Right, and it depends on the average cost, depends on everything. Obviously, we don't know.
You know what I mean? But if you're looking to get in, I mean, you could, like we said.
Yep.
But just like even when we talked to Josh, like he was like, you know what, it's probably better companies to even get into right now. Like he brought up like Nvidia, which we talked about.
He said he got that from us actually, which is fire.
For real. So I mean, proceed with caution. That's all.
Nothing else to add on that. I agree. But that covers up basically our current news, correct? So let's dive into Q&A session, because I know you guys have to ask us questions. One of the questions that we received was obviously around real estate, because we talked about it earlier, and now we can dive into more detail. It says basically saying how to monitor the stock market when you're looking to buy a house, right? Because obviously a lot of people invest in the stock market as a goal to currently, see how it does and then pull out. So how to go about that? Honestly, we're in the same boat. Like, we actually just did this personally. I could tell you my story. You want to chime in after?
Yeah.
Basically,
very similar.
Yeah, it's literally almost the same thing, honestly. Like, basically, we set up a budget, right? And we were like, okay, this is how much we can invest. This is how much we could save. And then we made a little real estate fund out of it. So
we set up our budget with the budgeting template that is a free link in the description.
Exactly.
Continue.
And we went over the budget template on Rookie Mondays.
Absolutely.
We went over it on Rookie Mondays.
Episode 2.
But no, honestly, after that budget template was set up and we had the investing and saving, we said, okay, real estate fund, we're going to basically say how much we're going to feel comfortable investing for that 1 year, right? So we're like, I'm going to give you as a number. Obviously, this is, do whatever you feel comfortable with, but let's just take 1,000 because it's easy. So $1,000 will be invested, $1,000 will be saved, right? And in that 1 year period, yes, it is a risk to invest in the stock market, to only invest what you feel comfortable with and you're okay with losing. But from what Tyrell has pointed out multiple times, it's better than just keeping a savings account because of inflation reasons, right? So we said we're going to put up $1,000, pull it out in that 12-month time period, see what the interest rate is. Yes, you do pay taxes on it because it's, capital gains tax. However, if you invest $12,000, it turned to, $13,000. We took that money plus our savings account money and then said, okay, now we're ready for real estate. It's a very simple formula, nothing too crazy. Like, we didn't get creative in it. And honestly, we did pretty safe things. Like the same thing we tell US, like VOO, which is S&P 500. VTI?
VTI, you know what I mean? You could accelerate it by, getting into something like QQQ or Nvidia or Apple. So at the end of the day, like, to monitor it, I would, and tell me if you agree or not, I would just say invest in safe companies, right, that you believe in. Don't get crazy with your real estate investing fund. And obviously know when to sell. Like, set yourself a limit. For me, I said 1 year, right? I didn't put a percentage on it. I was okay with 1 year. I didn't care if it was 2% gain or 30% gain. I was okay with that. If you want to set a limit on saying 6 months, that's fine. Or if you just want to say, yo, at 20% I'm going to sell.
just have a limit, set a goal, and then follow it.
Right. And then so it's like, you know, if you think about it, the way we described it is like, okay, yes, half of that money you had left over went to savings and half of it went to investing. But some people are like, well, dang, I'm going to sell all my investments that year. Depends how you want to do it. Like the only part where we differed is like, I said I was going to like split my investments. So half of my investing money was from my long-term portfolio, and half of my investing money is from my real estate portfolio.
Yeah.
So the real estate side is something I plan on selling within a year. The long-term side, obviously, I'm holding that long-term.
Yeah.
You know?
Yeah. No, 100% agreed on that one. So hopefully that makes sense. If it doesn't, just once again comment, and we apologize if we didn't clarify that for you. Then we got another real estate question. Actually, this one's going to be popular. Obviously, how to invest in real estate with low money. So this one's like a funny take because I believe we answered this.
Yeah, we definitely covered this on the show a couple different times, so you should definitely check out our previous episodes. But some strategies we could talk about is like, I know you wanted to talk about wholesaling, for example.
Yeah, like, you know, shout out to Terry for this one. Honestly, he's doing a great job with this stuff. But wholesaling is a great thing you could do. Basically, when you get a, you know, so if he
Terry,
is
my fault. Terry, you can follow Terry at T Cash. He has T Cash on YouTube.
Oh, for sure. No, he speaks a lot about wholesale. So definitely, you know, hit him up, follow him for this one. But essentially, I'm gonna try my best to do it. He does it way better. But basically, you know,
pro.
like
He a wholesaling pro. You should tap in.
If he owns a home, right, and he's trying to sell the home, I would be like, yo, as someone who comes in as a middleman, I would just say, yo, you know, this is how much your home is worth. Let's just make it up, $100,000. Okay, cool. I don't think it's worth $100,000. I think it's worth $90,000, right? Because you start finding little things. You do some market research on it. Because remember, the seller is always going to try to get more money out of it, right? So you just say, cool, $90,000. So you get his home under a contract for a certain time period, and then you got a seller. You basically get that contract, and then you go to buyers, which is the easy part, but you're still doing work on this, right?
All these investors.
Exactly. So then you go to these buyers, which are investors, and then you tell them, hey, I have a home on contract for $90,000 after repair value, which is ARV, and you show them numbers, which shows basically saying it's actually gonna be worth an X amount, right? So if you purchase this for $110,000, deal could be done. So they buy it for $110,000, and then you, as a middleman, come up with $20,000 in the exchange. Obviously, you have some expenses on that you would cut out, but that's a way you can actually get into real estate with no money, right? You didn't have to invest a penny of yours.
Exactly.
So that's a great way to do it.
Because anybody can do wholesaling. It's mainly generally a free process almost. You know?
Yeah, obviously
barely any cost. Barely.
Exactly. It's not like you have to put like $20,000 in. Another one you could look into with if you don't want to do wholesaling, because it is a lot of work, obviously, right? You do have to put in time and effort. FHA, which we spoke about. Which one was the one that you mentioned again?
I talked about lease to own. And you could look up what I said on like a previous video. But lease to own virtually is when you have an agreement with your landlord to purchase the house from your landlord.
Yeah.
In simple terms.
Exactly.
Something you could set up. And I know you just said like FHA, which is where you could put 3.5% down on the house. But like you could also look into just a conventional loan. Yeah. Which is just, you could also get 3% conventional loans. Yeah. Depending on the lender you talk to. 5% is more common. Those are still low percentages.
Yeah, if you're doing like a single family home, which is just obviously like just, you know, one home itself, you could actually do what he said, the 3%. There's a lot of lenders actually that give you 3% depending on your qualifications. So if you have a good credit score, so you know, a job, an income, you could provide all the information. They actually do 3% for you. Just do your research on that piece and talk to different lenders.
Yeah, and then another thing you could do, I know we giving y'all a bunch of information right now, but another thing you can do is buy with your friends. Yeah. We spoke about that as well on this show. Like buy with your friends is something that's become very popular in this time period where we described the real estate market just now earlier in the video. So in this time period, buying with your friends is very common. Yeah. Very, very common.
Honestly, and to that point, this question, like the reason why we're spending time on this is because we want to make sure you realize this point. A lot of people want to get into real estate. I think it's like the instant gratification, but it's really more so about the delayed gratification that's important. At the end of the day, you want to get into real estate with the low money, or you know, very little money, however you want to put it. That's, yes, it's cool, but just be smart, because if you have, you know, let's just say Tyrell has $60,000 to invest. He feels very comfortable investing, but I'm like, yo, I have $10,000 to invest. I have to realize that I'm not in the same position as him, and I shouldn't rush to get into real estate and do a deal with him because of just me wanting to get property. If I can't afford it, I can't afford it. right? So make sure you have your numbers and you do research on it. Just because you have 10,000 does not mean you should actually spend 10,000. You should give yourself some space to actually give yourself comfort, just in case something goes wrong with the property.
Yeah, and I want to emphasize this: there is no wrong time to buy real estate if you buy right.
Yeah,
you have to buy correctly. If you're making bad deals in real estate, even in a great market, you made a bad deal. If you made a great deal in a bad market, you made a great deal. You understand what I'm saying? So just always buy right, and like we said, we will help you with that on this show, on Bag Talk in general.
For sure. And then you want anything else on that?
Nah.
I think we're good, right?
Yeah.
All right, cool. Then we actually, this one's funny because the only reason we're mentioning this is because we actually just did an episode. So Acorns was something we got hit up about, like, yeah, was Acorn good? What exactly is it? We actually just did an episode on this, which is really funny. What was it, like Monday, right? So episode 3, I think it was.
Yeah, right. Episode 3.
So we actually did a whole walkthrough on Robinhood and Acorns. So essentially, what we said early in the beginning of the episode is just check that video out, and it explains everything to you, essentially, right?
Episode 3 of Rookie Mondays.
Do you want to add on to anything? Like, what is Acorns?
Yeah, Acorns is a robo-advisor. So it's like you don't have to make decisions no more. You don't have to choose stocks. You just tell them, listen, I want to put, for example, $100 a month into the app, okay, and it will invest your money for you. All right, it's a computer algorithm. It knows exactly what to do based on the risk tolerance you choose. So you tell them, I want to be aggressive in the stock market, and the app is going to handle it all for you. It's automated, so you don't have to worry about choosing anymore. That's the beauty of it. So Acorns is a beautiful way to do that. They also have a roundup feature where they take your change when you make transactions with your card, and they take your change and invest it in the stock market for you as well. It's connected to your card, so so many benefits to it. But we went, like we said, in detail on Monday, so check that out. It's
great for beginners, so definitely something worth your time. And then I knew we were gonna get this question. NFT, what is it? So in the most simple definition of it, you can explain it, but non-fungible token, right? Everyone's talking about it. We explained this again in Crypto 101, I believe, right? So let's just tackle it real quick. What is it?
Yeah, non-fungible token. So you have to know what it means to be fungible. When it's fungible, it's when you're exchanging assets that have the same value. So like we said this on the video, if you have $10, you could exchange $10 for 10 single dollar bills. Or you could send 10 single dollar bills for a $10 bill. You feel me? Now, what bring NFTs value is that they're non-fungible, so they cannot be exchanged. So
because it can't be replicated, right?
Yeah, it can't be replicated.
One.
Yeah, it's verified on the blockchain. There's only one of its kind. It's unique. That's what brings it value. So people think, okay, because NFTs are popularized by the pictures. So they think, okay, well, if I see like a picture of NFT, I could just screenshot it and it's the same value. No, that's like me saying, if I redraw the Mona Lisa, that's the same value as the original Mona Lisa.
There was a whole meme on this, by the way. It was like literally, it was talking about like, what is an NFT? It's like, yo, I took a screenshot of it. I got the NFT. It's literally what you're saying. It's not true. You don't actually have it.
It's not. And we know what the authentic one is because of blockchain technology. Like we did a whole crypto breakdown where we got in depth on that. So we can't get in depth again right now. We got more coming for you, even on Rookie Mondays. But we'll go right back into these crypto terms in a more basic way for everybody to understand.
For sure.
You know what I mean? But NFTs, ultimately, just think about it in the sense that it's authentic assets, right? It's like it's uniqueness. That's what sells NFTs is unique.
I would say virtual, right? It's all virtual. I just want to make sure you guys understand that. Digital. I'm sorry, because don't get confused with like physical, because you can't really touch it. Obviously, that's the big thing. I know someone actually hit me up and was like, "Yo, like if I get an NFT, like can I buy it and like just like sell it and like hold it?" Like, no, you can't hold it. That's the thing that you want to make sure it's clear.
And NFTs are just like a big part of like things like the metaverse and stuff. NFTs are not just pictures. I just want to clarify that. It's not just pictures. NFTs can be buildings. They actually, even in real life, they sold a deed with real estate. As an NFT. So like there's houses right now where the deed is in the form of an NFT.
It's the future, honestly. We're obviously heading towards it. I know Gary Vee talks about it a lot, saying like 99% of them are going to be failures, like the .com bubble. So you want to make sure you're smart with NFTs. Like make sure you actually are investing in them that are backed up by credible brands. So like Nike, for example, I know is big on NFTs right now. Adidas is big on NFTs right now. So just make sure you actually are, rocking with those that are backed by credible brands.
And Gary Vee, he just had an NFT restaurant. We posted about that on the channel. So a lot of use cases.
And then finally, I know this is the last question, so I'm sorry if we did not get to your question. Like, we're trying our possible, our best that we can. So just continue commenting below with your questions. DM us for sure. We're gonna try our best next time as well. But to end it off, it says, what cryptos are you eyeing for this boom? So in my opinion, as I say, like I usually just rock with the top 2, and then at the end of it, I'm not gonna lie to you, if he tells me something and then like I look into it. Other than that, I have top 2. I'm very, very simple when it comes to crypto, but I know you have more detail, right?
Yeah. So we know the top 2, Bitcoin, Ethereum. That's what.
Oh yeah, sorry. That's what I was referring to.
Yeah. But so I'm also, of course, always gonna be investing in those. But I'm looking into things like, I'm invested in. I'm looking into things like Chainlink. Yeah. Which is like a decentralized Oracle network. Okay, and for we will get in detail about these things. We just can't on this video. Yeah. Oracles essentially bring real world data to the blockchain. All right, so I'm looking at Chainlink. I'm looking at things like Solana. We've talked about as well. Solana, Avalanche, Cardano. These are things that bring competition to Ethereum. They're bringing NFTs to their platforms. Yeah, NFTs exist on their platforms, which is major because we just talked about how that's the future. Yeah, they're big in pushing the DeFi, which is decentralized finance. So, what is DeFi? It's just really the sense of like everything that happens in the world right now in finance. It's centralized. And so DeFi is the decentralized version of that. There's a lot
in the most simple format.
In the most simple format, right? So we're talking about loans, lending, savings. Everything that happens in the finance world is happening in the crypto world, decentralized. So those platforms are big for that. Decentraland and Sandbox are huge for metaverse. So big future with Decentraland and Sandbox. And then the last one I would say to look into is like STX, which is like Stacks, which is they're actually a network that's going to enable DeFi, NFTs, apps, and smart contracts for Bitcoin.
I didn't even know that. See, this is what I'm saying. Like, I actually learned something with you guys as well, honestly.
Yeah, for Bitcoin, because we know Ethereum's big for that. That's what Ethereum is about. But STX is gonna bring that to Bitcoin's platform, which is major.
That's something. See, as I said, once again, like this, when he tells me more stuff about it, like I learn and then I go do research. So I'm on the same boat as you guys actually on this one, honestly. So that should cover our Q&A session, I believe. I don't think there's any. Is there any other question? I don't know. Nah. Yeah, I think we're good with Q&A. And finally, for the closing, so there is a lot of stuff coming up this week in terms of earning reports. I know last week we mentioned it. So this week we got Disney on Wednesday. We got Uber on Wednesday. I know Twitter is coming out on Thursday, I believe, right? Same with Zillow. So that's gonna. I know we spoke about Zillow, but that should give you guys some more updates on how the actual institutions are playing into the real estate market, because it's big, obviously, right? Yeah. So we got that. Chipotle.
Affirm is also on Thursday.
Yeah, Affirm is. I'm actually looking forward to that one because obviously that plays a factor with the whole PayPal and Square stuff that we've been talking about. Yeah. So those are a couple of things you guys can look at. And then the other big news is inflation, right? So on Thursday, they're actually going to announce and drop what the inflation rate is. So they're actually expecting it to go up. So if you really think about it right now, from his reaction, you kind of gave it away. But like inflation is, once again, they're projecting it to go up 0.5%. So it's going to be all-time highs again. So inflation's going up. Interest rates we talked about are going up. House prices are going up. Our favorite Facebook that we grew up with is going down. And honestly, Tyrell and I are chilling. Everything's fine.
Everything is fine. I promise you we're really happy right now.
So like, obviously there's a lot happening. Yeah. So that's some things you guys could, look up for this week that's coming up. And then obviously, Rookie Mondays. On Monday, we're going to be dropping our other video, which is going to dive a little bit deeper into investing. So once again, if you haven't already checked it out, make sure you check it out.
And we're going to tell them how to actually pick a stock.
Exactly. So I think that's going to be something really, really cool for you guys to check out, because obviously, if you don't know, you don't know.
Yeah, we don't want them picking trash picks.
Yeah, exactly. Then you look bad, and you make us look bad. You're part of our family.
We're a Backtalk family. We gotta all be elevating, man. No bad portfolios in Backtalk.
Exactly. We expect a nice return. But honestly, if you still have, not already liked this video, make sure you like it, please. Make sure you're already subscribed, and if you're still watching, thank you. We appreciate you guys so much. Like always, comment any questions you have, DM us, make sure you email us anything, and we got you. Nice. But, stay tuned for more, and we're going to catch you guys on Monday. But until then, peace.
Peace.